In this video, I am going to reveal all the trading strategies that pro traders use while trading. If you have capital, follow this video till the finish because I will teach you every trading method for crypto, forex, and stocks. You'll discover how to use these ways to create insane amounts of money. There are 22 strategies, each unique and more interesting than the others. Let's go. The retracements of Fibonacci use the Fibonacci retracement tool by first identifying a swing low and swing high on a chart. Then drag the tool from the swing low to the swing high. Next, wait for the price to make a pullback to one of these levels, ideally the 0.382 Fibonacci level because that's the most common level from which price tends to reverse. If price touches that level, that could be a good buy entry. Keep in mind that price could also reverse from other Fibonacci levels. Combine it with other confirmation signals to get a better result. Entry breakout patterns. For breakouts, it occurs when there is a sharp and abrupt shift in pricing in one direction. This often develops after a period of market consolidation. For instance, in this case, the price is consolidating until it abruptly goes dramatically down. This is known as a breakout. Traders might anticipate breakouts by using certain patterns as a guide. The rectangle pattern and wedges and triangles are two of the most prominent breakout patterns. Reversal patterns occur when prices move against the current trend and establish a counter trend. Traders may identify these patterns on a chart, which can help them anticipate reversals before they occur. Double tops and bottoms are the most famous reversal patterns. Triple bottoms and tops, cups and handles on the head and shoulders. By comprehending the Elliot Wave sequence, the theory known as Elliot Wave postulates that markets often move in 5 waves before reversing and creating a new set of waves in the opposite direction. Traders might forecast the price's location. By heading and adhering to the pattern on a chart, we may assign the numbers 1 through 5 to each wave point. Currently, there are regulations in place to guarantee that a movement is regarded as legitimate. Elliot Wave first wave 2 can't be longer than wave 1 and usually pulls back to the 0.618 Fibonacci level. Second wave 3 can't be longer than wave 1. Third wave 4 can't be lower than wave 1. And fourth wave must stay above wave 1's peak and typically pulls back to the 0.382 Fibonacci level. Here's an example of an Elliot Wave in action in this chart. Therefore, we may utilize this as a possible buy entry when price makes a move higher, based on wave 4 theory, which states that price tends to draw back to the 0.382 Fibonacci level before continuing upward. Equitable worth retraction of gaps. Equitable value disparities. An equitable amount. A candle generates a gap when there is an imbalance in the buying or selling to determine a fair value. Finding a big candle is the first step in creating a gap. Following, draw a rectangle in the space created between the previous candle's wick and the following candle's wick. Currently, this level serves as a possible magnet where pricing maybe go back before moving forward again. By examining certain candlestick forms, traders may use the candlestick patterns approach to forecast future price moves. Noteworthy candlestick patterns include shooting star patterns, which denote rejection as shown by the lengthy wick on one side, and engulfing patterns, which imply great momentum in the direction of the engulfing candle hammer. DOI patterns that indicate market neutrality. This indication completely substitutes a regular candlestick chart with a Hinachi chart, which often produces less noise. A green Hinachi candle indicates an upward tendency in the price, whereas a red, the size of the candle's body, also reveals the strength of the trend. The bigger the candle, the stronger the trend. The Heikin Ashi candle shows that the price is on a downward trend. Remember that the Heikin Ashi does not represent the actual market. Rather, it is only an indication. Moon cycles / phases. Moon phases are a notion that timing the market by using moon cycles. Moon cycles are seen by traders to be connected with human emotions and behavior, which may have an impact on the particular market. Moon phases are said to be good for a certain trend. Currently, they are mostly employed to indicate market tendencies. A new moon indicates a bullish market, while a full moon indicates a negative market. Renko is a tool that replaces traditional candlestick charts with Renko charts. Unlike traditional candlestick charts, which create new candles based on a set period of time, Renko charts create blocks based on price changes. For instance, a wrinkle block appears every 1% change in price, signifying a 1% change in price. Of course, you can adjust the parameters of this through the indicator settings. Crypto charts might be used by traders to separate noise and spot trends. Remember that Renko charts just serve as indicators. They do not show the actual market price. A green Renko block indicates an uptrend, while a red Renko block indicates a decline. Harmonic configurations. These are harmonious designs, sophisticated pricing patterns based on Fibonacci numbers that have a certain structure. Traders may then utilize these particular shapes to forecast future price movements. For instance, when the price forms a sequence of 4 moves that resemble the letter M, a bullish pour pattern is established. These specific guidelines can then be applied onto a real chart so that if you see a price forming a series of 4 movements, you can use the Harmonic Pattern tool to check if the price that formed matches a pattern guideline. Each point, labeled X, A, B, C, and D, has a specific guideline. For example, point X to point B needs to have a value between 0.382 and 0.5. Point A to C needs to have a value between 0.382 and 0.886. The same thing applies to the other points. If it does, you may then decide how to proceed depending on the pattern that emerged. There are several harmonic patterns that can be found. The most famous ones are butterfly, bat, and crab, and each has a distinct value. Encouragement and opposition, assistance and reluctance. These are important horizontally created levels where the price has previously rebounded off and may do so again if the level is below the price. If the level is above the price, it is referred to be resistance, and if the price approaches it, it is term support where you might initiate a buy position. Adaptive assistance resistance, that is comparable to support and resistance, as well as dynamic support and resistance indicators such as the moving average are used by dynamic support and resistance to serve as our important levels rather than static horizontal lines. Tendency during a trend market. Trend lines are important levels that appear diagonally. You may use trend lines to determine the general direction of the price. Positive trend lines are bullish. Negative trend lines are bearish and resemble support and resistance. The trend line may also be used to determine potential entry points. For instance, if price retraces to a trend line, this may be a favorable sign to make a purchase. When a price moves within the tool's steep angles, it indicates a strong trend. When a price moves within the tool's shallow angles, it indicates a weak trend. To apply the Gann angles, first navigate to the settings and make sure to check the lock price to bar ratio. Gann Fan / Gann Angles. Position Gann angles is a tool that displays multiple lines that spread continuously on different angles. These lines can then act as potential key levels and could also help you measure the strength of a trend. The next step is to choose a market range, indicate its swing high and low, and then draw a straight vertical line at its beginning. Next, use the Trend Angle tool to measure 45 degrees. Then position the Gann Fan tool at that 45 degrees. Angle of momentum indicators and trend indicators. Momentum indicators are those that gauge the intensity and direction of a trend. They work best in markets that are experiencing a trend. The most well-known momentum indicators are the MACD indicator. Moving averages show that an upward crossing denotes a bullish trend and a downward crossover denotes a negative trend. When the price is above the moving average, it suggests a bullish trend. When it is below, it indicates a negative trend. The parabolic trend indicator shows a bullish trend when the DOT is below the price and a bearish trend when it is above the price. A green trend indicator denotes a bullish trend, whereas a red signal denotes a negative trend. The most well-known oscillators are trend oscillators, or oscillators that show the relative strength of a price. They work best in turbulent or sideways markets when the line is in the oversold area, which suggests a potential upward reversal. If it's in the overbought area, there may be a potential negative reversal. Stochastic lines may cross over one another to forecast future price movements. If both lines are oversold, this suggests a potential reversal to the upside. If both lines are overbought, this suggests a potential reversal to the downside. Divergences in divergences happen when an indicator shows a signal that is contrary to the actual change in price. Divergences can occur in a variety of indicators. For instance, using the MACD indicator, you can see that the price is forming higher highs, which is bullish, but the indicator shows the opposite, a lower highs, which is bearish in this case. When this occurs, it is typically a sign that the trend might reverse. Divergence indicates the possibility of a price reversal, allowing you to enter a sell position. Volume indicators. These are the kinds of indicators that demonstrate the strength of a price. Changes seen while monitoring the trade volume. Notable volume indicators include weighted average price, which illustrates the relationship between an asset's price and its overall volume, and price volume, which shows the volume for each candle. The longer the bar, the greater the volume. It may be used as dynamic support and resistance or as a moving average in trading. Volume profiles. They show a horizontal volume bar that may be seen as important tiers for possible entrance points. Similar to support and resistance, these zones can be thought of as crucial levels for possible entry market structures positions. Supply and demand, also known as order blocks, are zones where significant price movements have occurred. If price moves significantly upwards from a level, it is considered a demand zone. If it moves significantly downwards from a level, it is considered a supply zone. Market organization. When a trader analyzes the state and movement of the market, they determine its structure. An uptrend structure is defined by higher highs and higher lows, whilst a downtrend structure is defined by lower highs and lower lows. In a trend, for instance, if the price makes higher highs and higher lows, this breaking of the prior highs is known as a break of structure. Change of character. This is known as price break of structure (POS). When price breaks the prior structure during a trend, it often indicates a reversal from the present trend. This is known as a change of character. If you think I missed any tactics, please let me know in the comments section below. If you enjoyed the video, I would appreciate it if you could also like it and subscribe to the channel. I will advise you to repeatedly see this video and jot some notes to pick the skills. For more trading tips, view this video.